Before we dive into the world of finance, a quick disclaimer. The information shared here isn't financial advice, simply a friendly discussion. Always conduct your own research and consult professionals before making investment decisions. With that said, let's dive into the fascinating world of the stock market and cryptocurrency. First off, the stock market. A place as old as modern capitalism itself. A grand stage where financial dreams are made or broken. But what is the stock market really? Well, it's a marketplace. A place where buyers and sellers come together to trade stocks, which are, in essence, pieces of ownership in a company. When you buy a stock, you're buying a tiny fraction of that company. You become a shareholder, an investor who has a claim on part of the company's assets and earnings. In other words, you become part owner of that company. Now you may ask, why would anyone want to buy pieces of a company? The answer is simple: to make money. There are two main ways to do this. The first is through dividends, which are a portion of a company's earnings distributed to shareholders. Think of it as your share of the company's profits. The second way to make money from stocks is by selling them for more than you paid. This is called capital appreciation. If the company does well, its stock price may rise, and you can sell your shares for a profit. Of course, the opposite can also happen. If the company does poorly, its stock price may fall, and you could lose money. The stock market's history stretches back centuries, with the Amsterdam Stock Exchange, established in the 1700s, often considered the world's first official stock market. Its purpose? To enable businesses to raise capital to fund their operations and growth. The stock market has evolved over the years, becoming a vital part of the global economy. Today it's a place where trillions of dollars worth of stocks are traded every day. It's a place where fortunes are made, lost, and made again. So, key terms to remember: stocks, shares, dividends, returns. These are the building blocks of the stock market, the language of investors. In essence, the stock market is a marketplace for buying and selling pieces of publicly traded companies. It's a place where the financial hopes and fears of the world play out in real time. It's a place of risk, reward, and the relentless pursuit of profit. On the other side of the finance spectrum, we have cryptocurrency, a relatively new player in the field. Born out of the digital age, cryptocurrency has been making waves and turning heads, and it's not hard to see why. You see, cryptocurrency is a little bit like the Wild West of finance. It's uncharted territory, a new frontier of sorts, and it's built on the fascinating technology known as blockchain. Now, if you're scratching your head wondering what blockchain is, it's basically a decentralized digital ledger that records all transactions across many computers. This ensures that the record can't be altered retroactively, without the alteration of all subsequent blocks. And here's where it gets even more interesting. The process of verifying these transactions and adding them to the blockchain is called mining. It's not the pickaxe and helmet kind we're familiar with, but rather an intricate process involving computers solving complex mathematical problems. The first one to solve the problem gets to add the next block to the chain, and is rewarded with a bit of cryptocurrency. Now, where does one store all this digital wealth? In a digital wallet, of course. These wallets can be online or offline, and they store the cryptographic keys necessary to access your cryptocurrency holdings. It's a bit like having a bank in your pocket, only you're the bank, and there's no physical money involved. Cryptocurrency's purpose is to offer a decentralized form of currency, free from government control or interference. It was first proposed in the late 90s, but it wasn't until 2009 that the first and most well-known cryptocurrency, Bitcoin, was created by an anonymous person or group known as Satoshi Nakamoto. Today, there are thousands of different cryptocurrencies, each with their own features and uses. They're being used for everything from buying coffee to funding startups, and they're changing the way we think about money. In essence, cryptocurrency is a digital or virtual form of currency that uses cryptography for security. It's a brave new world out there in the realm of finance, and cryptocurrency is leading the charge. So, how do these two financial arenas stack up against each other? Let's start with the stock market. It's been around for centuries and is well established. It's a place where companies can raise capital by selling shares, and investors can buy and sell these shares. The stock market is regulated by government bodies such as the Securities and Exchange Commission in the United States. This regulation provides a level of protection for investors, but it also means there are rules and restrictions to follow. The potential returns in the stock market can be substantial, especially if you're patient and invest wisely. However, it's also possible to lose money. particularly if you're not careful or if the market takes a downturn. But here's the thing, with the stock market, you're essentially betting on the success of companies and the overall economy. Now let's shift gears to cryptocurrency. Cryptocurrency is a digital or virtual form of currency that uses cryptography for security. Unlike the stock market, cryptocurrency is relatively new, having only been around since 2009 when Bitcoin was introduced. Cryptocurrency operates on a technology called blockchain, a decentralized system that records transactions across many computers. This decentralization is one of the key selling points of cryptocurrency. It's not controlled by any government or central authority, which can be seen as a pro or a con, depending on your perspective. The potential returns in cryptocurrency can be astronomical. We've all heard the stories of early Bitcoin investors becoming millionaires overnight, but the risks are also high. Cryptocurrency prices can be extremely volatile, and there's always the risk of hacking or fraud. While some regulations are starting to be introduced, it's still largely an unregulated market. So how is cryptocurrency perceived by the general public? Well, it's a mixed bag. Some view it as the future of finance, while others see it as a risky, speculative bubble. The stock market, on the other hand, is generally viewed as a safer, more traditional investment. But remember, both carry risk, and both require careful research and consideration. In terms of accessibility, both the stock market and cryptocurrency are more accessible than ever thanks to technology. With a smartphone and an app, anyone can buy stocks or cryptocurrencies. This has opened up these markets to a whole new generation of investors. To sum up, the stock market and cryptocurrency are two different beasts. The stock market is traditional, regulated, and tied to the tangible economy. Cryptocurrency is new, largely unregulated, and operates in a digital, decentralized world. Both have their pros and cons, their risks and rewards. While they may seem worlds apart, the stock market and cryptocurrency have more in common than you might think. So, we've taken a whirlwind tour of the stock market and cryptocurrency. But what's the takeaway? Let's do a quick recap. We've looked at the stock market as a traditional and time-tested investment avenue. It's an arena where shares of publicly held companies are issued and traded, either through exchanges or over-the-counter markets. We've also delved into the volatility of the market and how factors like economic health, changes in leadership, and even global events can influence stock prices. On the flip side, we've explored the relatively new, digital frontier of cryptocurrency. This form of digital or virtual currency uses cryptography for security, making it extremely difficult to counterfeit. We've discussed the decentralization of cryptocurrencies, their potential for high returns, and their inherent risks, including their vulnerability to hacking and regulatory changes. Both these investment avenues have their own set of pros and cons. The stock market, while subject to volatility, is generally viewed as a safer bet due to its regulatory oversight and historical performance. Cryptocurrency, on the other hand, can be a high-risk, high-reward game, offering potentially huge returns but also carrying significant risk. As we've stressed throughout this video, it's crucial to conduct thorough research before diving into either the stock market or cryptocurrency. Understand the risks involved, consider your financial goals and risk tolerance, and if necessary, consult with a financial advisor. Looking ahead, the world of investment is likely to continue evolving. Technological advancements and changes in regulatory landscapes may shift the scales in favor of one or the other, or even create a more symbiotic relationship between the two. It's an exciting time to be an investor, with more options and opportunities than ever before. Whether you choose to invest in the stock market or cryptocurrency, remember that knowledge is power. Thanks for watching. Be sure to like, comment, and subscribe. And hit the bell notification so you'll get updates anytime we upload a new video.